Hi there, this is Sandra with the Mortgage Center. By now, you've received many tips from us about some of the pros and cons of looking at refinancing your mortgage to consolidate debt, or possibly looking at early renewing your mortgage to get a better interest rate. So, no one can really predict what's happening with interest rates, but here are some questions that I think you want to be asking yourself, and this is what something that we go through with our clients on whether or not it makes sense to refinance early, consolidate debt, or to wait, or just to do an early renewal on your mortgage. The first question is, how long can you lock in an interest rate? Well, it depends on the financial institution. Like we work with banks, wholesale banks, credit unions, lots of different financial institutions and mortgage investment corporations. And every institution has a different lock-in period. So some are 30 days, 60, 90, 120 days. If you're buying a new home, it can be up to a year. So, I think that's why it's important when we have a conversation to figure out what your main goals are and then find an institution that will have the appropriate rate hold period for you. So I can tell you though, if you do have credit card or line of credit debt and are looking at consolidating it, I normally recommend getting that done within a 30-day period because all of the extra interest that you're paying on those credit cards and lines of credit, it makes sense to put that into your mortgage because you're going to get an overall lower rate. It's going to help you with your credit history, and you can start paying off the debt in a little bit more of aggressive way. What happens if that rate lock period that we have you in, or the rate hold period, expires? Well, the interest rate can change. It can go up or down depending on what's happening in the market. And we will probably ask for some additional documents from you, which include updated pay stubs. We'll likely have to do a new credit check. So, not a big deal. It happens all the time, but something you want to be aware of. The other thing I wanted to mention to you, and the other question I often get is, well, what happens if interest rates go down during my rate hold period or during the time that I'm doing a refinance on the mortgage? Here's the great news. On a weekly basis, a colleague of mine looks at all of the mortgages that we're doing. And if the rates go down, we adjust the rates automatically for you on the way down. But if the rates go up, that mortgage rate hold and that mortgage approval that we have for you, you are protected against that. And so we just need to make sure that once we've got the mortgage approved, that we have the income, that we have all of your documents signed, so we can track that in a really great way to help you. We love helping people and would love to connect with you. You can schedule an appointment by going to my website at skipthebank.ca. You can also connect with us on all of our social media platforms. So looking forward to helping you.